Hi, everyone. I'm James Garbutt.
And I'm Denny Dumas.
And this is the Garbutt Dumas Real Estate Podcast.
Jamie, it's February 15th, 2023. Already. Crazy.
Time flies when you're having fun, Denny.
We are having fun. 2023 is off to a strange start. It's with rates going up significantly in the last 12 months. It was kind of difficult to predict what this year was going to look like, especially early in the year. But let me share a couple stats with you. And I know you know this already, but our listeners don't. Of just how low inventory is being to start the year. So January 2023, lowest inventory in a month since 2004. Lowest new listings in a month since 2004. What the media is telling you is it's the lowest number of sales in a month since 2009, which also is a staggering number, but obviously the reason for that is due to nothing being available for sale.
It's a product of low inventory. Yeah.
And we have a number of examples in the last couple of weeks of homes, condos, townhomes, all three that have gotten a much better result than they would have 2 months ago. And one of the things you say consistently to our team, to clients on this podcast.
Are you going to go into the moving target?
Well,
or there's this,
that too. But one of the things you always say is you rarely see a fall that is better than the following spring.
Yeah.
Rarely. I think maybe one time in my career have I seen that.
You know, even it's debatable. You're right. I think maybe one time I've seen it, but it was not significant.
Yeah.
And I mean, there's always weird things like, I mean, arguably the COVID moment. You know, when COVID first hit, there was that little blip before the storm that the market just slowed and halted.
Yeah.
You might have had a better outcome selling that fall than in that March. And yeah, you're right. And I've been a realtor since 2008. And if you're thinking of selling in November, often you're going to get a better price in January or February.
Can you share some thoughts on why inventory is so low? The other thing the media is talking about, which is a true enough stat, it's just maybe shared in the wrong light a little bit. But sales in January 2023 were down 40-ish% comparatively to last year, and then lowest sales volume since 2009.
Well, I think you kind of nailed it with saying significant rate hikes is one of them. But why does that? And significant, just to be specific, it was 4% in 9 months. Interest rates went up 4% in 9 months. So from an affordability standpoint, that really affected a lot of buyers' ability to buy what they want to buy or to be able to afford what they want to afford. And homeowners are in some cases, have these much higher payments. So we may see an uptick in default, but it's not really showing its colors just yet. Why is inventory so low? I mean, when uncertainty exists and sales are low, the listing inventory correlates to sales. You know, I think maybe in 2008, before that market crash, there might have been a dynamic where there was a lot of listings build up on inventory, like a lot of listings were building up, and it felt like there was a lot of inventory for very little sales. This market's a little bit different because it never really felt too oversaturated. Last year, there was moments where the listings outweighed the sales, but not significantly and not to the same extent. So, I mean, openly, more people need to buy in order for more listings to show up, because a lot of those listings are showing up because they've bought something. And I think it's just a high correlation. I think we're going to see groupthink, you know, if spring ends up having more optimism, if the rate hikes stop and people expect it to come down and we see the fixed rates come down, just naturally more people will be willing to buy and more listings will show up once they buy.
I hope so.
I hope so too. But you know, you nailed it. Like 2004, lowest inventory since 2004. And I imagine in 2004, there was a lot less houses in the city. So we're actually comparing two different size cities too. You know, one thing that the last real estate board stat package for January from the real estate board mentioned is obviously low sales, low inventory, 42.9% down from the 10-year average. So the number of sales in Greater Vancouver were down 42.9% from the 10-year average. And that's a big number. But I always tend to think that people in the city want to move, and the interest rates are largely causing this. And when you have a 42.9% below the 10-year average, that means a future month might be 42.9% above the 10-year average. So we will see.
Talking about that 10-year average too, I don't know the exact number, but it seems like we've been under that 10-year average for how many months in a row? 8 months in a row? 9 months
I was
in a row?
hoping to look that up before this, but I want to say it was around May of last year.
Yeah.
Don't quote me on that, but give or take, call it a month or two. Might have been earlier. I will say that the last February stat package from the Real Estate Board of Greater Vancouver said steady demand, price gains continue. And here's the one, like a bit of a shocker. For across all property types, the sales to listing ratio, so the number of sales that take place in a given month compared to the inventory available, last February, the sales to list ratio was 50.8%. So that means that if there's 100 listings, 50.8 of them sold in a given month. And typically, upward pressure on prices starts when it's above 20%. So what this says is it's a strong seller's market. And in January, last month, the sales to list ratio was 13.7%. So it went from 50.8% last February to 13.7. Now, I think it's a bit of a misleading stat. I think there's a lot of overpriced inventory out there, and there are some markets that are much slower than others, but it is a significant shift over the last 11 months from steady demand, price gains continue.
Yeah.
Yeah.
That stat blankets Greater Vancouver?
All product types in Greater Vancouver. And you and I both know there are, further out, there are products that are slower. And there are also some ambitious sellers that are on yesterday's prices. That often happens.
It would be interesting to break that stat down into some neighborhoods that we work in, Tri-Cities specifically, North Vancouver, East Vancouver, to see what that sales stat looks like.
Oh, we came prepared, didn't we, Denny?
Did we?
So, a blanketed stat that, covers all property types across the Lower Mainland isn't going to tell you that great of a picture. That's saying if the sales ratio is 13.7%, I mean, an opposite story on that would be 6 of the last 10 detached houses in Burnaby sold above list price. So, recognize that when you kind of isolate listings and sales in a certain price range, in a certain product type, in a certain area, it can still show a strong seller's market. And I was quite shocked to see 6 out of the last home sales in Burnaby go above list. Now, to compare, this is comparing where we're at this year versus last year. Year to date, as of today, February 15th, 2023, year to date, Burnaby has 35 house sales. And last year it had, in the same time frame, about 90. So we're still down in terms of sales volume. So yes, the sales volume's down, but 6 out of the last 10 went above list. Is that a future trend? Time will tell.
I mean, I think 100% it is. And you can look down the map at basically any product type on this side of the river. Surrey, Langley, Pitt Meadows, Maple Ridge are a little bit different story right now. But in the Tri-Cities, in New West, in Burnaby, in East Vancouver, you can look at any product type and you could probably find pretty similar numbers. You can look at our listing, specifically our team. I think we're at 13 sales right now. Let's say 7 listings roughly, and 4 or 5 of those have had multiple offers this year. So what's that? 60, 70% of our listings have had multiple offers?
I know we're exceptional realtors that obviously deliver results, but that is.
I mean, that's not even arguable.
I will say, I think where this settles out is probably around. My guess is for single-family detached homes, the ones that have been selling are in the one. In this particular example in Burnaby, they're probably on average in the mid ones. Obviously, there's a range, but it's a more affordable detached home that the sample of sales is coming from. So if you're really kind of my thought is if we're looking at the next 20 sales in Burnaby, New West, Tri-Cities, my guess is about 35 to 40% of them will probably experience full price or above list sales, and the rest won't. I can remember looking at this, like I always kind of take a snapshot of looking at the last 10 or 20 home sales. And I remember looking in New Westminster last spring, and 18 out of the last 20 home sales went above list. And then I re-looked at that number this fall, and 2 of the last 20 home sales were above list. So it's kind of like an inverse relationship. But I think that kind of settles out where I would expect to see over the next 20 detached home sales, 7 to 8 of them might be above list, 35, 40%. And it is still a genuine strategy when you have very little inventory out there. If you look, anyone looking for a home knows this. When there's not much available and more buyers keep showing up, it's more likely to see bidding wars and increased offers. I had a agent in North Van that I checked out a home a week ago on, and they received 5 offers the other day. Another agent, and this is a higher end home, detached home in North Van, nice one, high 3 list price, 5,000 square foot custom built home, and they had 32 showings over the last weekend. So activity is picking up. Sales, I don't think quite reflect what's going on right this moment.
Yeah.
Yeah.
We're a little early, I think, in terms of it telling its true story in stats, I think.
What are you finding that's maybe hotter and what's not?
Well, yesterday I made the comment on social media that it seems like the magic number right now is $1 million. And in the suburbs, let's say, and I kind of put North Vancouver, I kind of wrap it into Vancouver now just because of the price points there. It's not really the same price point as Tri-Cities New West anymore. It's elevated. It's
even
higher end.
Arguably, in a lot of cases, apples to apples, more expensive than a lot of neighborhoods in West Van. Some areas, like there was a historically West Van was more luxurious, but there's more people nowadays that want to live in Lynn Valley than say Horseshoe Bay or maybe even Caulfield in a lot of areas. Yeah.
I think just because of affordability and size of mortgage, that $1 million number seems to be where things are for us in suburbs of Greater Vancouver, really busy versus slightly slower. And I'll give a few examples. We had 2 New West condos 2 weeks ago, listed in the same week. Both had multiple offers within 4 or 5 days of being on market. We had a Port Moody townhouse list on Monday, so that was 2 days ago. Had 10 showings in the first 6 hours of being on market, received 3 offers, and has an accepted offer, subject free, well above list price, which is a number that would not have existed in the fall 2 months ago, right?
3-bedroom or 2-bedroom townhouse?
It's a 2-bedroom townhouse.
Yeah.
So when we look at sales in the fall, and there was a couple in November and December of 3 bedrooms in that complex, we're basically at the 3-bedroom price now.
Yeah.
For the 2-bedroom a month and a half later. And then we talk about the New West Key. So we have a 2-bedroom condo listed in the New West Key, and we sell quite a bit in that neighborhood. We're there monthly, and I say to Jamie, I don't know if I've ever seen a listing in the Key this busy, this quickly. Listed on Monday. It's now Wednesday. We've had 14 groups go through already. I don't know if I've ever seen that in the New West Key.
Price point and size approximately?
Price point, $650,000. Size just shy of 1,100 square feet.
Nice location on the Key. 30-year-old-ish building.
Yeah.
And that's getting a lot of interest.
A lot.
Yeah. And no more rental restrictions.
Isn't that huge? Yeah. That was one of the downsides. There's a few buildings in the New West Key that have pet restrictions too, which unfortunately still stay. But
the rental restriction. If you go before this, they had pet restrictions. They had restrictions across the board. Yeah. You could only have poodle terriers, and
if there was a restriction out there, the New West Key would have it.
For sure, for sure. One thing that I kind of took a glance at is where potential opportunities are. Well, on the note of what's hot and what's not, I mean, just let's acknowledge townhouses are hot. If you like, there's a demand for layouts that suit young families or families of any kind. Fortunately, we've been behind a lot of townhouse sales over the last year, and we have more coming. And one thing, we sold 2 townhouses in New West in the same complex. One was an earlier part of the year, which was arguably supposed to be the hotter part of the year. One was at the tail end. And the tail end one outperformed the earlier sale, or at least it sold for a higher price. And so that was like a January sale versus, I think it was a November sale. So there are examples of townhouses virtually being unaffected by the market. And we have a really hot 3-bedroom coming up in Port Moody soon. I'm really curious to see how that one goes down.
Well, speaking of Port Moody, we had one on Noons Creek that sold early 2023, second week of January, I believe. And that sold $130,000 higher than the most recent sale, which was like October.
Really?
Sold high 1.2s, and that got multiple offers. It really is just there is not much for sale. And when one comes up, there's more than one person looking for it right now. There was one more example. We had a buyer. It's so price point dependent. It's actually quite funny to watch a listing list slightly high and have be crickets. Come off the market 3 days later, list at the proper number and have 25 showings.
Yeah.
It's so this is a specific example. Port Moody townhouse just off St. John's, listed at 1.2, nothing for 2 weeks. Came off market, listed at 1.1, sold in 2 days. Which is the right number today.
Yeah.
1.2 maybe existed like March last year, but not anymore. And as soon as it's priced correctly, it's selling.
It's a very sensitive market that way.
Very.
I could see that. I also, mean, one of the things that I've been noticing lately, and normally as realtors, we don't pay a lot of attention to BC assessed values and BC assessments, but in this particular market, we kind of love them sometimes because the only time a realtor loves a BC assessment is when they're listing something for below assessment and they get to advertise it.
Exactly.
Assessments went up. Assessments were released last July. I'm guessing they did the appraisals last June. Maybe even last May because they have to do so many of them. So they were assessed in a lot of cases in a better market than they were today. And what I've noticed is some of the latest home sales are coming in below assessed values. Granted, I've seen these windows in the past, and it doesn't take long for that to, for values to, sale prices to trickle up. We're talking about, maybe there was a house, one of the last sales in New West was about 10% below assessment. So what that means is, to me, if you have a high assessed value, doesn't mean that your home is worth that much, but if you're selling your home, you definitely want the world to know about it. If you have a low assessed value, I mean, historically, most homes sell over the assessed value, and assessments don't take into account renovations. They're not always that accurate because they're just blanking them across the Lower Mainland. But right now, assessed values on average are higher, and in a lot of cases, higher than what properties are worth. That trend will probably not last. Well, I don't think next year that trend will exist.
Next year, it definitely won't.
No.
Because assessments will go down this year. I think when you get, it'll be next January, you get your one from this July. And I could probably see them going down 10, 15% across the board.
We'll see. Depends how hot that May, June market is when they start getting out the appraisals.
Yeah.
I looked at a few numbers and just trying to, I guess on the not so hot side before I get into those numbers of what's selling. Land value, land value, a good structure has arguably gone up in value, like it doesn't have to be 20-year-old, but like a 4,000 square foot home that's 20, 30 years old. The materials behind that home in this inflationary world over the last 12 months has probably gone up in value, but the land that it's sitting on arguably has gone down because it's more expensive to rebuild these homes. So anything that's the teardown homes, the land value properties, they're struggling a little bit more because builders they're usually sitting on product. They may not have as much resources and funds available today, but the cost of construction is higher too. So to make the numbers work, the land has to be a little cheaper to make up for that. Mm-hmm. Homes with a bit of a negative, whether that's a weird floor plan, a busy street, a home that needs a lot of work, those ones are struggling because buyers don't feel the sense of urgency as they did before. They're not putting out those subject-free offers on anything like they did before, and they feel like they have a little more time to shop. That could change, but right now it's a bit of a struggle if you have a home with a negative feature. But if you have a home on a quiet street with a good floor plan, I think you're going to hit it out of the park.
Probably, if you talk about like the toughest residential sales right now, is probably the undersized older homes in original condition.
Yeah.
If I'm talking about like a 1940s, 50s bungalow type home that is 1,800 square feet when you're on a piece of land that could have a 3,500 square foot home. If those homes are updated and livable or move-in ready, they seem to be selling if they're priced correctly. But the ones that are in original condition that need work immediately seem like those are the toughest to move at the moment.
I think you've nailed it, unless they're priced very low.
Yeah.
There's always a right price. One thing that I looked at was just condo sales that have been happening this year and where maybe some opportunities might be. I blanketed New West, Burnaby, Tri-Cities, and I looked at new condos because I've mentioned this before, that pre-sale pricing has gotten very ambitious. There was a time in history where 10 years back, call it, maybe it was more, where if you bought a pre-sale, the price you paid was the same as an existing resale unit that was of the same quality. In some cases, there were moments where you could get a better deal on a pre-sale than an existing place, not by much, but it was because, at that time, buyers were taking a risk by buying off of a showroom and off of a material board and, for a product that doesn't complete in 2 years. Then the market gained, a lot of people profited off these pre-sales, and then it became a speculative investment. And there was a lot of wins. And I think right now we're in an environment where some people paid some pretty high prices over the last few years for pre-sales. And as those buildings complete, there's no room for a margin. They're either at the value they paid, some cases below the value they paid, some cases a little bit above, but there's not the big wins that happened before. So, and when I'm thinking pre-sale price, call it New West, Port Moody. Port Moody is a little more expensive than New West, but let's go say Coquitlam. A wood frame, if I were to walk into a pre-sale and look at a wood frame, I'd be thinking maybe you might have a better idea, Denny, but my guess would be maybe $1,050, $1,100 a foot, depending on if it's maybe a one bedroom. Probably $1,100 a foot if it's a one bedroom, and if it was concrete, maybe $1,300 a foot. Is that accurate in your opinion?
I'd say those are probably high numbers today.
Probably high numbers
on the high
pre-sales.
end.
In pre-sales.
Yeah.
Okay,
yeah.
So let's go $1,000 a foot for wood frame and $1,200 a foot for concrete.
Yeah.
If you, based on the last 30 days, I think last 60 days of sales for condos that are 1 to 4 years old, wood frame was probably median sale price around $900 a foot, and concrete was median sale price about $1,000 a foot. And a lot of that, and when $1,000 a foot was like 30 or 40 floors up off North Road, and between Coquitlam and Burnaby there. So I don't think pre-sale condos can make money at those prices. I think that pre-sale condos still need to be priced like 10, 15, 20% above those numbers to have a chance. But I would say a potential opportunity is picking up newer condos right now. And one little, I guess, the example I'm giving you is for a 2-bedroom. So 2-bedroom, 900 a foot and 1,000 a square foot for concrete. 1-bedrooms are about 100 square foot, $100 a square foot more. And 1-bedrooms, just in general, have a slightly higher price per square foot. So personally, I would, if you have the decision of being a landlord now or placing a bet on a presale, the presale better have a favorable deposit structure, be priced relatively close to resale values. Otherwise, you might be better off just being a landlord tomorrow and buying something that exists.
Even though all the developers are calling me personally and thanking me for my business in the past and wanting me to come back to their presentation centers, I don't know about you, but I have never had this many phone calls in the last 3 or 4 weeks than I probably have in the last 4 years from developers.
Oh, yeah.
Presentation centers calling you, hey, have you heard about our new project in Coquitlam? I'm like, yes, it's been for sale for 3 years. I have.
Hey, do you remember when I was waiting outside for 8 hours begging to buy a unit at your last one?
And you wouldn't even give me an umbrella. You remember that?
Times have changed.
Very.
Oh, it was cutthroat to buy a presale before. You felt like you won a lottery ticket to pay $1,300 a foot for something in the suburbs. And times have changed. And it should. It was getting a little too speculative.
The environment now is very different. It seems like every day we get emails from projects around Greater Vancouver that maybe started selling a year and a half ago and have 20% left or something like that. And they are offering very favorable deposit structures. They are offering significant
favorable being
incentives.
What price? Like 10%?
I've seen as low as 5 in the last month. Pretty significant incentives. I think the highest I've seen is 10% off, which could be $100,000. Forgot my train of thought.
That's okay.
I've heard a number of developers postponing projects too.
Yeah, I would anticipate that. Yeah.
So what does that pre-sale game look like in 2 years though? When a lot of people are incentivizing buyers to get rid of their last few units in a project, and a lot of developers are postponing projects. Does that pre-sale game go back to the frenzy in a year and a half because there's a very small amount of projects for sale?
I hope not, but it could. There was lineups and pre-sales. When was First and Royal? That was was that in the fall, or that was in New West?
I'd say middle of last year.
Oh, I don't even
When they
I don't
launched?
even think it was that long ago.
Really?
But long story short, there's been some examples of pre-sales that have been launched in this down market that have performed quite well.
Yeah.
So-
the one in Port Moody too, Sitka House.
Yeah.
I think in their first week, they sold 75% of it or something.
And that was in the fall, or was that earlier? Do you remember?
That was the fall. That was probably in October.
Not a prime time to launch a project. No, but they still perform well.
Yeah.
My thought is pre-sales have been ambitious on their pricing. Unless they get well ahead of the market and heat up well ahead of the market, my hope is that they stay around the same prices over the next 1 to 2 years. And there may be some opportunity in a year from now, say, if the prices are around the same for a development that completes 3-4 years from now, there might be some good market gain there. Because I do think in a cycle over the next 4 years, as rates are likely to lower, prices are likely to go up. I want to share some numbers of sales by volume, just because we talked about the January stats saying sales are down, but obviously inventory is down. But I want to share the difference between this year and last year. So year to date, as of today, February 15th, 8 homes sold in New West, and last year in the same period, 35 homes sold. In Burnaby, this year to date, 35 homes sold. Last year, about 90 homes sold. But as I mentioned, 6 out of 10 got above list. East Van, 38 homes year to date. Last year, about 120 sold in this period. So they were, by the volume, we're well down, but also in East Van, 4 out of the last 10 sold above list. But volume is significantly down. I do see it upticking. I do think it's going to uptick, but I don't know if we're going to see those last year numbers.
That's interesting. The 3 cities that you mentioned are all roughly 30% of the sales of the previous year.
Yeah. And the macro said it was 42.9% below the 10-year average, but last year was above the 10-year average. So it's right, a third. That's basically what it is.
Does inventory pick up? Like, what does this spring look like? Is inventory going to catch up with how busy it's getting now?
I don't see us maybe going above the 10-year average. I don't think it's going to be a hotter than average market, but I think that the inventory's got to pick up. More people are showing up. Maybe the next 1 to 3 months might have a little uncertainty if they do a subtle rate increase, or if they do something that, if there's more negative media headlines, like if inflation's not checking. But 6 months by the fall, it'll probably be an active fall. I would anticipate an active fall.
Should we quickly touch on Bank of Canada?
Yeah, let's.
So January, I forget the date, 25th or 26th, when their last meeting was, they increased their rate 0.25%. I think everybody knows that now. In their post-game press conference, that's right, they made a pretty heavy note that this was going to be the last one for a little while. And yesterday's US CPI numbers, I wonder if that's going to change. Based on that press conference in January, I kind of thought, okay, maybe this is the end, and this kind of sounds like them hinting at no more rate hikes for now, or at least they want to watch it for a few months to see what happens. But in the US yesterday, consumer price index up 0.5% from last month, where December saw basically no increase. So I think a lot of people are thinking, oh no, maybe we didn't do enough, and time will tell. But I believe, when's the next meeting? March 7th? It's that Tuesday or Wednesday. I don't know what to expect, honestly, to moving forward. It's very difficult to have these conversations with consumers because everyone wants the answer. And unfortunately, we don't have it. We can tell you what is currently happening in the real estate world and how rates are affecting Greater Vancouver real estate. But in terms of where rates are going and like what the next move is going to be, I don't know if anyone can tell you exactly what's happening there.
My hope is that the fixed rates will still remain on that. Like right now, we're on a few mortgage brokers' emails list, and a few is an understatement, I would say. But one of the ones that I see advertised as the lowest bait fixed rate, I say bait because it's kind of probably a a non-brick and mortar institution or something like that. But I've been seeing fixed rates as low as 4.64% in that email, and that's down. It used to be above 5 a few months ago. If they do hike the rate again, and that goes up with it, it could lead to more negativity. If they do hike the rate again, it depends obviously how much and how if there's a pattern. But my hope is that that rate continues to come down. And the one thing I noticed is that a 3-year fixed rate was at 4.99%, which is the first time I saw that below 5% in a few months. And I mean, there is an argument for that one. I mean, there's an argument to say in 3 years, you're going to probably have some variable, like some pretty good rate options on your hand. So not that I have a crystal ball, but if I did have a crystal ball, it might lead towards that 3-year fixed.
I wonder if that's almost too long, though.
It is, but
like there's a reason that it's low, right?
Yes.
It has to be that banks are anticipating something happening and they're trying to lock people in for longer than they probably should lock in for.
I guess, I mean, you have to do the math, but 3 years at 4.99 versus 5 years at 4.64 as of February 15th. Yeah, you do some math and you decide, are you willing to wait 5 years for your next mortgage, or are you willing to wait 3 years for your next mortgage? And yeah, I don't know what the better answer is there. But variable is probably less appealing nowadays in the short term. The appealing part about variable is the lower penalty to break it. But yeah, I think there's going to be more of a push for fixed, because in uncertain times, people want a little more certainty.
We'll talk more about fixed and variable in the next one. But right now, in talking to a mortgage broker the last couple of days, I think that 4.64 number is kind of like a baity number to get people to call them.
Yeah.
Usually those super low advertised numbers are for insured mortgages when you have less than 20% down. I think the conventional 5-year fixed right now is around 5.
Yeah, that would.
For an investment property, if you're not living there, those numbers change a little bit too. And I've heard 5.29 being a decent rate right now for an investment property. And when you're looking at variable comparatively, prime rate right now is 6.7. The better banks are offering like 0.4 off of that. So 6.3, 6.4 is kind of where your variable is going to land right now. There are some banks offering I guess they really don't want people to take variable mortgages right now, but their discount is plus 0.5.
Yeah.
One of the banks is for variable mortgages right now, which, I mean, I don't know who's taking that one on at the moment. 6.7 plus 0.5, so 7.2%. It's getting up there.
Hopefully not for long.
Hopefully.
Yeah. What would you just overall sum up the opportunities of the moment for those that might be listening and just not getting into the market because of these high rates and uncertain times?
I think the sentiment is the same that we've kind of been preaching for the last 6 months is upsizing has a ton of opportunity right now. Your condo or your townhouse that you live in has not seen the decline in prices in the last 12 months that single family has. And yes, the interest rates suck. And moving up the interest rate, or increasing your mortgage is going to be temporary monthly pain. But long term, I think a lot of opportunity moving up the real estate ladder in Greater Vancouver right now. I
agree. And I would say if you wait for rates to go down, you're also waiting for prices to go up. So 100%. It's, there's positives to a better mortgage, but the negative, I think, is a higher price tag. If you're on the fence, Denny, you just don't know what to do and you want someone to chat about your situation, what should someone do?
This is what we do every day. These are the conversations we have every day with consumers. And on the investment side too, I've had probably 3 or 4 in the last week of, we have some extra money. Seems like prices are down. What should we do? We love sharing knowledge. We love sharing what's going on in real estate and where to find the, I hate using this word, but where to find the deal.
Yeah. In particular for people looking for more space, I think those situations need to be analyzed on an individual basis. And like a lot of the conversations I have and Denny's having every week is giving a homeowner tips to improve the saleability of their place while also help giving them clarity on what and where to buy. Because the moment you have confidence in what you're looking for, you want to be able to sell your place quickly. You don't want to see a home that's perfect for you and not be on, have your place in poor condition and just not ready to go. So right now it's February. Often at this time, we're telling potential homeowners to get your place ready. That means make the landscaping, clean up the landscaping, paint where needed, get your home presentable, and start seeing some open houses. Get out there, start looking at properties so that you get more clarity on what you want to buy. And the moment the right home comes up, your place is ready to go. And we would love to chat with you about that. That is all.